So everyone starts out by learning support and resistance, and then they move into more candlestick patterns, head and shoulders, all this stuff. But this video is going to cut through all the BS that you're supposed to learn and take you to the actual meat and potatoes of what trading really is. I'm going to be breaking down the single best indicator that completely transformed my trading and has allowed me to turn $10,000 into $230,000 in under 2 months. And the craziest part of it all is that it's super unknown. Not a lot of people actually know how to use this indicator, and just by knowing about this indicator, you will be outpacing 90% of other traders, because this is a zero-sum game. So you need to have an edge over every other trader out there, and this video is going to provide that for you. So without any further ado, let's go into the world of order flow. So what is order flow? It's not just footprint charts, it's not just time and sales, it's a combination of being able to see the orders in the market come through in real time. So you're able to see limit orders, market orders, how many were placed at the bid, how many were placed at the ask. This way, you're gonna be able to use it as a confluence to your already existing strategy. We're gonna be breaking down what footprint charts are. A footprint chart basically shows the volume and how many orders were placed at the bid and ask at a specific price point inside of a candle. Now, I know that sounds like a mouthful, but let me go ahead and break it down just a little bit more. I want you to consider footprint charts as the skeleton of an actual candlestick. Behind the candlestick, you're actually going to be able to see every single order that took place at every single price level within that candlestick. This way, you're going to be able to see passive buyers, passive sellers, aggressive buyers, and aggressive sellers. And you're going to be able to use this information as a confluence at areas that you're already interested in. So if you trade support and resistance or supply and demand, you're going to be able to see these orders come into play at those specific areas. Now, since this is a lot of information packed into one candle, a way I like to use this and simplify it is by just looking at the delta. The delta is the difference between the bid and the ask. This way, you're able to see who's in control without having 600 numbers on your actual candle, and you're going to be able to see where exactly at what price level buyers or sellers were more present at. So positive delta means that buyers are more aggressive at that price level, and red delta or negative delta means that sellers were more aggressive at that specific area. Now I'm going to be breaking down the single best setup within footprints, within order flow, that has helped me make tons of money. I've been able to catch reversals at the exact bottom. I've been able to sell at the exact top, just because I understand how this one thing works, and that's called absorption. So what is absorption? Absorption is pretty much when there's a level where the market is trading into, but the price and volume aren't making sense. Meaning that there's tons of volume, and say we're at a support level, there's tons of volume, and there's a bunch of sellers on the footprint selling past it, but the price fails to continue lower. That means that there were passive buyers who had limit orders at the bid. So when the sellers would sell into it, their sells would get absorbed, and the price would then not move, and the price would then not move down, but instead possibly reverse up. There's a few different ways to spot this in the markets, and I'm gonna show that to you guys right now on the charts. So let's get into it. So in this section of the video, we're going to be going over what footprint charts and order flow really is. But to understand that, you need to go and think of the market as an auction. The market is an auction market where there's buyers and sellers looking to agree on a price. So price is determined by supply and demand, where buyers bid for what they want and then sellers ask for what they want to sell. This is called the bid and ask. These transactions occur when the bid meets an ask. If a buyer is willing to pay the seller's price, a trade happens. And if the market moves based on imbalances, that means that there's buyers who are more aggressive, meeting people at the ask, or the sellers are more aggressive, which moves the price down. The different types of markets there are the stock market, the futures market, real estate auctions, and eBay auctions, where there's bidders who compete for an item and the highest bid wins. And that's how the market is. And I want to kind of relate it to things that you might use outside of the market, so you kind of understand what I mean by trading being an auction market theory. So the definition of the participants in the market, there's two different types. There's buyers and sellers. Buyers are people who are usually bidding and trying to get the best possible price, the lowest price. And then sellers are traders who are looking to sell at the highest possible price. And these are also called offers at specific price levels, waiting for buyers to accept. More aggressive sellers push the price lower by placing market orders at the bid. So there's two different types of market participants that I want you guys to understand. Number one is large institutions and firms who help stabilize the price by always offering to buy and sell, and they make their profit from the difference between the bid and the ask. The retailers, like me and you, they're smaller traders using personal funds that typically trade short term on technical analysis, and order flow traders usually follow institutions to see what smart money is doing. So why is understanding market participants important? Because it lets you see who's controlling the market. You don't want to be in a retail-based move. You want to be in an institution-based move, because those are the people who have the money to actually control the markets. And it shows whether the price is being driven by real liquidity or speculation, and it allows you to anticipate potential reversals or breakouts based on the order flow. So candlesticks are just the tip of the iceberg. We're going to be diving a lot deeper into order flow and showing you what it's all about. So what is order flow? Order flow is the real-time flow of buy and sell orders in the market. And this is an order flow chart. This is a footprint chart, and you're able to see every single order that came in at the bid or ask at that specific price point. So how does order flow tie everything together? We learned that the markets are auctions where buyers bid and sellers ask. We know that market participants include retail traders, institutions, and market makers. Now, order flow lets us see this process happening in real time. Now, I know you guys are probably confused on how to read these charts. This is essentially what it is. This chart to the left and this chart to the right are the same exact thing. This is just candlesticks. This is the skeleton of the candlesticks, showing you what's behind the curtains of those candlesticks, showing you all the different orders. So how do you actually read it? So first of all, this candlestick is this footprint. It shows you the bid and ask placed at every single price point within that candlestick. A footprint chart is a trading tool that provides a detailed view of buying and selling activity price level in a candlestick. It helps you see real-time order flow, identifies buy and sell pressure, and it reveals hidden market strengths and weaknesses. So why would you use a footprint chart? Now, the problem with a traditional chart is that it only shows the OHLC, which is the open, high, low, close. They don't tell us who's in control, buyers or sellers, and it's hard to spot real volume distribution within a candle. So could you have predicted this fake out? No, but when it comes to the footprint chart, you are able to see the buyers defending high volume shelves and potential fake out of a reversal. Whereas on a traditional candlestick, you'll be seeing an 8-point drop where you get scared out of your long positions, and footprint charts help alleviate that stress. So understanding footprint charts is a lot deeper than just seeing the bid and ask at every level. So each candlestick contains rows at different price levels within that candlestick. The bid is on the left side, and then the ask is on the right side. So how do you read it? If buyers are aggressive, there's going to be more buy volume on the right side, which is the ask. And if the sellers are aggressive, there's going to be more sell volume on the bid side. So how do you understand it a little bit deeper? So footprints allow me to see the underlying activity behind the candlesticks. I identify the strengths or weaknesses of buyers and sellers and spot significant buying or selling pressure, and recognize areas where absorption is continuing or where absorption is actually happening. So there's different types of footprint charts. There's the bid and ask chart, there's the volume footprint, and then there's the delta footprint. And the delta is basically the difference between the bid and the ask. So what's a bid and ask footprint? We're going to go through all of these and just show you exactly what they are so you understand them to the best of your capabilities. A bid and ask footprint displays the actual number of contracts traded at the bid, which is the left side, and the ask price, which is the right side. So how do you read it? More volume on the ask side? This means there's aggressive buying. Where there's more volume on the bid side, that means there's aggressive selling. And on this one, you can see there are aggressive buyers compared to the bid side, meaning that the price is being pushed up. So identifying strong buy and sell imbalances is something you need to understand, is by being able to see that buyers are more aggressive here, spotting aggressive market orders versus passive limit orders, and confirming real buying or selling pressures at key levels. Remember, when you're trading order flow, you're using this as a confluence. So you need to be able to use these and see how it reacts off your already existing levels or zones, and then see if the sellers are stepping in or if buyers are aggressive, vice versa. Now, what is the volume footprint chart? The volume footprint chart displays the total volume traded at each price level within a candlestick. Unlike the bid and ask, it doesn't separate buyers and sellers, it just shows up where the most trading happened. So how do you read it? High volume zones are significant price interest, potential support and resistance zones, and then low volume zones are where there's less liquidity and price will move through swiftly. How do you apply this? Identifying key liquidity zones where price is most accepted, spotting high volume nodes where important support and resistance levels are, and finding areas where institutions are likely active. So you could see here that buyers took control as demand increased over here, and this area acted as a support level when we continue back in here, this little volume shelf, and then the market bounced from there. So you can use this as confluence in your already existing supply and demand zones. So this is my favorite one. What are delta footprint charts? A delta footprint is delta, where it shows you the ask volume minus the bid volume. It measures the difference between aggressive buying and selling, and it shows whether buyers or sellers dominated a candle. So how do you read it? Positive delta means there's more aggressive buyers, and negative delta means there's more aggressive sellers. So how do you apply this? You confirm strong buying or selling pressure, identify trapped traders, and spot momentum shifts and trend reversals. So over here you can see sellers are in control as we have a negative delta throughout this candle, and it's much easier to read. And then you can see buyers tried buying all the way up here, but then passive sellers took over and moved the market down, as you can see by the delta, and a strong breakout to the downside occurred, almost 30 points if you were able to identify the selling. So here are my 3 favorite setups on a footprint chart. So absorption and trap traders. So what is absorption? Absorption occurs when aggressive buyers or sellers hit the market but at large limit orders absorb those trades, preventing the price from moving further. So what are the key signs of absorption? There's high volume at a single price level, price stalls despite heavy market buying and selling, and delta remains neutral or weak after large trades. So why is absorption important? It shows where the smart money is exiting or entering. It identifies key reversal points and continuation zones, and it helps avoid breakouts and traps. And absorption usually occurs at previous support and resistance levels, at highs and lows of a range, or during liquidity hunts, which we like to call stop runs. So over here we can see that there is significant selling occurring, but price is not continuing lower. That's because there's passive buyers at this area buying these charts and moving the price higher. There's a fake breakout by one tick and trapped breakout traders, which is a fake out. And there's more selling occurring, meaning retailers are still continuing to try to sell, but then passive buyers step into the market and move the market higher. But we pull back and there's significant selling occurring, but we still can't break out. And then we get a stop run of those sellers and the price moves higher. So another setup that I like to look at is a volume shift. Volume shift concludes high volume nodes where there's the most trading and it acts as a support or resistance, low volume nodes where price moves quickly through these areas, and this shows where institutions are placing orders, helps traders identify breakouts and possible pullback entries, and it acts as support and resistance after a breakout. And how does this occur? High volume nodes represent areas of heavy accumulation or distribution, so that acts as a support or resistance, and traders who miss the initial breakout look to enter at a pullback. Institutions use these levels to add to their position, so price tends to act off of high volume nodes, either bouncing or breaking through them. So here you could see that we had volume building up at the lows and we broke out of the low, but no one was interested in trading lower, and then we moved higher. We had this area where this is a high volume node because the buyers showed up, thicker volume price building as price goes higher, and it shows as an area of interest. Market breaks out, it pulls back. This area shows people buying back at that high volume node. It acts as an area of support and then continues higher. So the recap I want to do right now is what did we cover today in this video? We covered understanding market auction and order flow, introduction of footprint charts, types of footprint charts, identifying key order flow setups, how to use footprint charts for trading. Mastering order flow is a journey. I want you guys to all understand that. Right now, this video might have made it harder or even easier, but footprint charts don't predict the future. They show trader behavior in real time. The best traders don't react emotionally. They read the auction and execute with discipline. And learning footprint charts take time, but it gives you an edge over 90% of traders. And that's what I'm here to help you do. And here's some common mistakes: overanalyze, trying to analyze every single number instead of focusing on key patterns, thinking absorption always leads to reversals, and only looking at the footprint without considering the bigger picture. Now, if you made it to the end of this video, I want to actually give you a chance to learn order flow and live trade with me for completely free. The first link in the bio is going to be a 7-day free trial link to my Discord, where I live trade every single day, screen sharing my order flow and teaching you guys real time as I enter and exit trades. If you want to do that, click the first link in the bio, make sure you're subscribed. And if you don't want to do that, you can also join my free Telegram, which will be the second link in the description, and I will make sure to teach you guys the best of my abilities. If you made it to the end, thank you for watching. Make sure you like, comment, and subscribe for more videos. If you found this useful, drop any of your questions or comments inside of the comment section. I'll be replying to every single one.